Hey traders, checking in on the stock market today. Bears keeping their complete control. It was a day marked by bulls unable to prove anything at any point in time. We'll look at what that looks like on shorter term time frames. We have gold bouncing off our downtrending support line from the video yesterday, and we're going to look at a bullish reaction in the cannabis space to some movement in the government. So SPY daily inside bar, we started the morning by rejecting from resistance by about 27 cents and then rolling over with very clear, convincing bear breaks. And again, the bears are showing up with the volume, proving their follow through. So let's zoom in on the shorter term time frames to just look at how similar, even though it was a very different day, tiny range and an inside bar yesterday, but they traded very similarly to each other yesterday and today. So yesterday we started the morning off with our low of the day, we moved to a new high of the day, failed the 5-minute trend change, lower high, reject from resistance again. We got over it by a couple pennies, but unable to see any follow through. Then the bears controlled the rest of the morning. Then we had a bull move at about 1:35 p.m., chopped around, and then at about 3:35, we rolled over into a weak close. So we started this morning with the high of yesterday being tested, 437.04. We reject, we set the low of the day, we reject again, we set a new low of the day. As soon as that happens, the bears convincingly reject from the high of yesterday and confirm a 5-minute downtrend. For the rest of the day, for the rest of the morning, we just traded in a 5-minute downtrend the entirety of the morning. We then bounced a bit, set a higher low at 135. So again, this bull move started yesterday at 140. So here, 135, bull move up. We chopped around. And when did we start rolling over? 335 into the end of the day. Very similar afternoons of trading. What that looks like on the bigger picture is bears controlling all morning, a bounce into an hourly lower high, and then a close near the low of the day. And the S&P 500, or I should say SPY today, got that clear lower low. And again, it's just complete control. So we only have 428.86 support nearby. We're testing that level right now in after hours. If that level breaks, 421.97 is the next level we're looking at. And again, the bears are showing up with the volume. Look at the volume since this pullback started. The 20-day average volume is this orange line. And it's just been doing nothing but trending up as the bears show up with the volume. And we're not that beat up on RSI levels. The hourly RSI is only just at 30. The 4-hour RSI is just at 30, and the daily RSI is at about 34. So we're not oversold. So we know the next time we bounce, we're just going to be scouting a daily lower high. Question is, do we break 428.86 support first to confirm that lower low? We know the bulls needed that inside bar bull break to set the daily higher low and shape up an equilibrium. And here we are back testing the low. QQQ, still weak, not a significant bear today. It was not the lead bear, it was actually down the least. But throughout the day today, we had multiple times where all of our major sectors were at the low of the day at the same time. No sector stood up and said, I'm going to be the lead bull today. We had the healthcare sector down 1.2, we had XLF down 1.6, and we had QQQ down 0.4. So certainly 0.4 is better than the other two, but it's red. And we're looking now at the next support level, 352.04, as monthly consolidation is underway, and we have a very clear daily downtrend approaching first daily oversold conditions in a very long time. This daily RSI currently being at 32 is the lowest daily RSI that we have seen since the COVID lows. That's very notable. So again, the major shift is on here into monthly consolidation, and now it's just a question of how much downside do we see. And there is no sign of a monthly higher low being set as the bears have their complete control of the daily downtrend. Healthcare sector started to bounce. It was a lead bull at one point this morning, but a daily bear flag confirmed. We dropped to the lower low. 126.23 is the next support level. But honestly, what matters more to me than these previous support levels is just the trend, the daily downtrend. So that's what I am using as my guide as far as bear control. Financial sector, further downside. So I started this morning and I approached this morning and say, well, if we break the high of yesterday on XLF, I'm going to cover my FAZ swing position. And we opened above that level. So I said, all right, well, I'm going to see how the first 1 minute. I literally was just waiting. How's the first couple minutes of trading going to go here? And this is the 15-second time frame where every candle is 15 seconds. And I very rarely use this, but I'm just using it to show my point. And my point is we opened, we gapped up above the high of yesterday. And within 1 minute of trading, it was very clear that we saw a bunch of profit taking on that gap up. And we dropped down very quickly, well below the high of yesterday. As soon as we opened, and as soon as we dropped down under 38.30 within the first 30 seconds, I said, okay, my stop is now over the high of today. If the bulls are able to recover from here and break 38.36, I will be all out FAZ. We double topped, and then we rolled over. And the bears had absolute control of XLF after that point in time. So fortunately, I did not stop out. And still in that position and still swinging it. And my thought process is I will swing XLF bearish, FAZ, until the bulls prove to me that I shouldn't. And today they did not. So still looking for a higher low compared to 36.03, but here is this notable pullback. And after looking at the last time that I went short and gave up on it too early, it's helping me hold this one longer. And I did the same thing where I was watching and knew that we were due for a short-term bounce. I was looking at 15-minute RSI levels. And in a previous video, I talked about the psychology where I don't want to exit my swing position and then try and reposition and then re-enter my swing position because too often I get left in the dust by focusing on shorter-term time frames. So I let the XLF bounce take place, knowing that my FAZ position is going to lose value, but I traded the SPY bounce. I was watching SPY 15-minute RSI down in the teens, and I was watching for a break of 430 here. I was watching this 5-minute bear flag. And in the chat room, I said, I am going to look to enter bullish if we double bottom at 430 or 09 or break 430 with zero follow through. And we bounced off 430. I made my initial entry. I exited half on a weak bounce, very quickly exited half to be break even. And then I just walked up my stop with the 2-minute uptrend. And so that allowed me to capture a little bit of profit on the bounce to offset a little bit of my account dropping as the FAZ pullback took place while the oversold bounce took place. So again, that's just how I personally am able to organize things in my brain better. I've got my swing position in a different account and my day trading position to try and offset it rather than trying to micromanage my swing position. IWM continues to pull back with XLF. We're looking for a higher low compared to 214.22. Still a lot of space for it, but the size of the retracement at this point favors an equilibrium will be the more likely scenario. Once we do find that higher low, we'll then look for a lower high in a tightening range. So at this point, both XLF and IWM bulls are just hoping to set the daily higher low as soon as possible, but we're anticipating tightening daily ranges for both of them as the other sectors are dropping to lower lows. SMH weakness didn't break the low of yesterday. It is an inside bar, but we closed down near that low. And again, one of our stronger sectors is no longer standing out strong. 249.35 is the next major support level here. So again, throughout all this, I am looking for monthly higher lows in SPY and QQQ and a ton of individual names. There's just a lot of space as to where that could happen. I mean, you look at Apple. Apple's got a ton of space for a monthly higher low. Google's got a ton of space. Remember our stair-step strategy. SPY broke it at 436. Now the question is, how much downside follow-through do we get on the monthly? Solar sector stood out green today, so that was notable. Bulls are defending weekly support of 77.20. We know the broader market. So many of my decisions that I make as a trader right now in this kind of environment are all dependent on the broader market. An individual name has it set up and it differs to varying degrees based on what the broader market is doing. But I know that if TAN is going to hold 77.20, we have to see the broader market see some bounce to help for the correlation to help the TAN bulls hold this support. I know that if SPY keeps dropping and rolls over for another 2 days in a row, that TAN is very likely to break 77.20. So individual names can only fend off correlation for so long before they roll over, and the TAN bulls are just hoping that the broader market can get a bounce going before 77.20 breaks to try and remain in this tightening weekly pattern. but it did stand out today. The MJ sector stood out today as well. There was a vote. It is worthwhile. It pays to be paying attention to all of the moving parts in the cannabis space with legislation in the House and the Senate. Because today was an example where the vote was supposed to be yesterday, but it went too long. So the vote ended up being today, where it was in a House subcommittee for decriminalization of marijuana, and it passed the House subcommittee. So now it's got to go potentially to be voted on by the House. But pretty decent probability that that was going to pass the subcommittee. And look at the reaction. It happened here. And big shout out to our members. We have members that are watching these government proceedings for 3 hours in a row to let us know when the vote is taking place and when that result comes in. And just to show you an example very quickly of these heroes spending their time for us. And just at 2:15, so Keister was saying, I think they got it, 2:15. Confirmed, yep. So confirmation was in at 2:15:55. And where's 2:15:55? Right here. And so from that point in time, even if it's at the high of that candle, for the rest of the day, as the market is dumping, the MJ sector went up 2.5%. At least the ETF did of MSOS. So paying attention for profit as far as the reaction to that vote. So now where do we stand on the daily time frame? Bulls have proving to do. Again, great day compared to the broader market. SPY was down 1.22%. You're not going to see the MJ sector green often at all when the broader market is red. So I can say now that MSOS bulls are positioned well, but we have to see the broader market bounce to help with that, because anything under 32.77 is just a daily lower high. And it's looking like our weekly lower high is shaping up here. It could be a weekly bear flag. So bulls taking any help that they can get, because the broader market has obviously not been helping at all this week. And it would be nice timing if the broader market could bounce tomorrow for the MJ sector. We'll see if that ends up taking place. Again, another couple names that are standing out well compared to the broader market. Tesla has multiple daily inside bars in a row. And TradingView is getting real slow on me. I'm going to have to reboot everything. So Tesla has multiple daily inside bars in a row. Again, it's still in a strong daily uptrend, holding on really well. So Tesla is positioned well if the broader market bulls can show up and get a bounce going. They do have delivery numbers coming out potentially tomorrow. It's usually on the 1st. It's usually on the 2nd, but the 2nd will be over the weekend. So some people are getting ready for tomorrow. And that would be a news event that we would definitely react to, but nice and tight and very likely to get a break tomorrow one way or the other. Netflix, we've been highlighting, has been standing out as a lead bull. It hit all-time highs today. So again, you just imagine, how is Netflix positioned if the broader market and the tech sector were to bounce from here? And the answer is they're positioned very well. There's definitely downside weight with these upper wicks the last 2 days because of the broader market weakness, but very impressive that the bulls were able to confirm that weekly bull flag so quickly. And now we just have to be cautious of whether or not they're going to be able to hold off the weakness in the broader market. And again, they're just trying to stay over 600 until the broader market and the big tech sector bounces, because they will be positioned very well if that takes place. The dollar started some 4-hour consolidation. Nothing major, just healthy 4-hour consolidation, but that was enough for the bulls in gold to bounce off of our downtrending support line. This was the falling wedge-like pattern that we drew yesterday. Shout out to Lori. So Lori watched the market video that I put out yesterday that many of you watched. And then in the pre-market live stream, which is free on this YouTube channel every morning at 8:30 a.m., she highlighted the details of a specific trade that she took based off this support line, and it saw a couple percent of follow through to the upside. So the gold bulls are hoping that this is our weekly higher low shaping up, and we'll need follow through next week, but a very significant bounce off of those lows on very minimal dollar consolidation. And silver did the same thing. Big flush down yesterday, but retracing a good bit of that drop. And we have a downtrending resistance line in play right now worth keeping an eye on for silver. We're testing that. Silver is still much weaker than gold overall. Again, monthly, weekly downtrend, whereas gold is looking for a weekly higher low. Very big difference between those two setups. I did stop out today. I made one entry attempt on Adobe, which I highlighted yesterday. And again, the broader market has to bounce for this trade to play out. So I watched the 5-minute tightening range this morning, and I saw the high of the day, the low of the day, and I entered playing off the low of the day and put my stop under 580. I wasn't even going off the daily support level, the low of yesterday at 576. Because if that low of the day breaks that was set on the morning, just like SPY did the same thing. SPY double topped at resistance, failed the daily inside bar bull break, and then rolled over. So I stopped out when 580 broke. And that was because in my mind, the trade is, okay, Adobe is extremely beat up on the daily. I'm scouting a daily oversold bounce. It's not going to get any follow through unless the broader market bounces. The broader market is not going to go up unless we break the daily inside bar bullish. So as soon as we had a convincing rejection on the S&P 500 from our daily resistance and we started dropping down to the lows, I stopped out and I saved myself, $4 of stop out. I could have put my stop under 576 as opposed to 580, but the S&P 500 is the reason I chose the closer stop level because the bulls failed to prove anything to us today. And again, I know we're not going to bounce if the broader market is not going to help. So we are in a different market environment than we've been in a very long time. And our trading styles need to adjust with that. Whether we're hedging, whether we're just straight up shorting more rather than going long. Oversold bounces are not working like they used to in a bull market. The hourly lower highs. The biggest difference for me is the amount of bear volume and the bear control during regular trading hours. Opening higher. SPY again today opened higher with the overnight session leading to a higher open when there's less volume in play, and then as soon as real volume was in play, the bears had complete control of the entire morning. And that is new. And all of our sectors, again, how many times on our way up, we're saying, watch for this, and it just didn't ever happen. It would happen once every few weeks with zero follow through, and now we're seeing it a couple times a week. We're seeing all major sectors at the low of the day at the same time, proving bear conviction. We will very likely set monthly higher lows, but that may be in another 6 weeks for all I know. One day at a time as always, and just not fighting trends. I'm not going to try a bounce every single day. And I'm going to, this is the longest I've held a short position in as long as I can remember. It's probably been a couple of months. So we have to adjust our trading style. And if you don't like trading in this market environment, it's fine to just sit tight. Because if you're preserving capital for when market environments favor your trading style, that's a win as well. You don't have to constantly be making money in every single environment every day. If you have to pay the bills with trading, then that's definitely a different story, and that adds a lot of pressure and stress, which is why I recommend multiple income streams to alleviate that stress and allow more flexibility with your trading. But in this current market environment, things are different, is the bottom line. So I appreciate you watching. Don't forget to do good things. We'll check in over the weekend. I'll do another MJ video and perhaps something else. We'll see how much time I've got. And tomorrow's going to be all about 428.86. And if we break those levels, from there we're just going to be looking at oversold conditions as daily RSI approaches oversold. All right, see you soon.